One Bill Ulivari. We're here today with Ron Cohen for the Final Third Network. We're just going to talk about insurance, long-term care insurance, Filial Laws, and things like that affect the insurance world. And Matt, why don't you just introduce things?
Matt Barafato, the Elephant Hunter. Again, why we do this, as you've heard if you've watched any of our stuff, is the final third. It's like, what are the issues that are on the table, challenges that people have when you're in the final third of life? And it just seems whenever you have a conversation at a barbecue, at a family event, or anything, if someone in the conversation is dealing with a parent or a grandparent, or even themselves, that they're caring for somebody. And it's like, this is like a common conversation with everybody now. It's not even...
It's a dementia issue, Alzheimer's, long-term care, the
right,
whole thing.
It's not even one thing. It's like, but it's a caring for that person. So when we, I met Ron a number of years ago, and as you were going to set the stage in this, we're not trying to sell anybody anything, but it just happens.
So I believe in full transparency and conversations without borders. So Matt has been selling insurance for a number of years.
35 years.
35 years. I just got my producer license in December 2018. I have yet to sell a policy, but it's a work in progress. And Ron is a guy that I go to, Matt and I go to get insurance, to find out who is offering the best products at what price and how do we solve this problem. So this is a network. We need to work together. Ron represents 60, 100 different kind of insurance carriers. And so he is the expert in the room, right? He's the elephant in the room in terms of talking about the long-term care and these kind of issues. So Ron, why don't you introduce yourself to us? Tell us a little bit about your firm. And
Sure. I've been in the long-term care industry for 23 years now. And as Matt said, most people are talking about this particular problem through personal family experience. And that's how I got into long-term care. I had an experience with my father who had a stroke and ended up in the hospital for a couple weeks. I didn't know anything about long-term care. I didn't know anything about Medicare, what was covered under Medicare for long-term care. And to make a long story short, my dad ended up needing to go to a nursing home, and they gave us a list. They said, you're going to need to go to a nursing home to get him admitted because he's not recovering, Medicare is not going to pay for this. And that was the first experience that I had in what Medicare was. I was 45 at the time, and consequently, after my father passed away, I thought that this was an industry that was interesting, and it was not very many people knew anything about long-term care at that time, what Medicare was going to pay for long-term care. And I got myself into the industry. I went to work for one of the leading insurance companies, New York Life, and studied long-term care. And I've been in this business now for 23 years.
Wow. So it's interesting, when you're sharing that, it's almost like every time a conversation starts, it's because someone's had a personal experience. And I really appreciate you sharing that. And I think what we're trying to do is educate everybody. Educate you, because there's some things you need to know that it's almost like everybody's where you were at when your dad was put, all of a sudden you're in a nursing home and saying, oh, no, how does that work? I put a list of things that I want to make sure on the table. One of them was that, and say, there's a lot of myths out there. And let's talk about that one first. You said about Medicare, and the biggest thing people say to me is, I'm not really worried. Medicare's going to take care of that, right, Ron?
But did I hear you say that Medicare if there's a possibility of you recovering, Medicare will take care of it. If there doesn't appear to be a chance of you recovering, then Medicare does not pay for it.
Exactly.
Which is why we need long-term care.
And another thing is that to qualify for recovery care, which is what Medicare will pay for, Medicare will pay for 20 days in a skilled nursing facility if you qualify for recovery care. And recovery care, there's a lot of different hurdles you have to jump over. And because of the funding situation with Medicare today, it's harder and harder to get approved. You have to be in the hospital for 3 days as an inpatient, not for observation.
Observation, right? That's the new that's the new hurdle. As my dad was in for a week, but he was still observation.
And they make you sign something when you go to the hospital today that you're there just for observation, not as an inpatient, even if you're staying overnight 2 or 3 days or a week like your dad. So it's getting harder and harder. You have to have that 3 days before you're admitted to a skilled nursing facility, before Medicare will pay. And then you have to be admitted within 30 days. It has to be for the same reason that you're in the hospital. And there's a bunch of other hurdles to get over. So if people are thinking that Medicare is going to pay for their long-term care, it's very, very difficult to qualify for that skilled nursing benefit for Medicare.
So depending on who you're asking this question to, you're thrusted into this environment. Mom or dad or grandma or grandpa or one of your siblings goes into the hospital, and all of a sudden your head's spinning, and then you have to think about asking these questions, because if you don't get them to determine that it's not observation, whatever, on one of those hurdles, we're all going to be faced with that. And that's why this is probably a topic for this. Just that topic alone could take up this whole episode. And I think we need to. I want to make sure that we're covering that, because that's something that people, they think, oh, this is going to be handled, and it's just really not if you're not careful. So what would you say are, number one, this happens to you, what's the first thing you want to be thinking yourself, Ron? What would you say?
If you have a loved one entering a hospital?
Yes.
Well, if they're going in for something that they're going to recover from, then if they fall into that category of 3 days as an inpatient, not for observation,
okay,
that's the first trigger.
One. Okay.
Right? But if you're going into a skilled nursing facility, let's say after a hip replacement surgery or after knee replacement surgery, right, and you haven't been in the hospital for 3 days, right, even though you had major surgery, you're not going to get Medicare to pay for that particular thing. So today what's happening is that the hospitals are releasing you before 3 days.
Right. Quicker and
just because of that.
Right.
Yeah.
Sending you home. And
that's crazy.
And that's where you have to recover at that point.
Are we at the point now where we are sliding an envelope full of $100 bills over to the doctor instead of the politician, Chicago style, where it's like, hey, I would really appreciate it if you admitted my mom and not just observed her?
Well, let's draw a fine line to that, because I know you're smirking as you said that, as we all grew up in Chicago.
Right.
The issue as I advise my clients who are doing just any health insurance things, to be a consumer of healthcare, you've got to ask questions such as, what are you charging for this service? Because I have a high deductible, I'm going to pay for that if I'm not. Right. In that same category, is this a question that we can reverse to say, hey, if you don't admit me, or my mom, or this person to it, he or she's had the surgery, come on, and is that worth having a conversation? I mean, I would have the conversation.
Is it going to do any good?
Right, what do you think, Ron? Is that something
first of all, only about 23% of nursing home care is considered skilled care, which is recovery type care.
Really?
If it's not recovery care, in other words, in my dad's case, he had a stroke, he was not going to get better.
Got it.
That's considered a chronic situation, and Medicare will not cover any chronic situation at all.
Pay attention to that, that's important.
So a good 75% of all long-term care is not considered skilled care.
Right.
It has to be recovery care to be considered skilled care. And now with those extra hoops of having to be in the hospital for 3 days, having your doctor admit you within 30 days, it's harder and harder. So people that are buying a Medicare supplement are thinking, oh, I'm going to be covered for long-term care. But a Medicare supplement only covers the part that Medicare doesn't pay for. So you still have to qualify for Medicare first.
Right.
So just because someone has a supplement, they're not going to get covered for that.
The supplement only comes in handy if you're approved and qualify for regular Medicare.
Right.
All right. So Ron, you had talked about something called an Illinois Partnership Program, and also one of the scariest things that came across my desk was when you were talking a few weeks ago about something called Filial Laws, which exist in roughly 29 or 34 of the states in the United States. But why don't we go with the Illinois Partnership Program first, and then maybe we'll touch on the Filial Law.
I'm really excited about the Illinois Partnership Program for long-term care. It's basically a partnership between long-term care companies and the state of Illinois to help people understand that it's important to realize that you need to take care of your own long-term care. Medicare is not going to cover most of it. Your Medicare supplement's not going to cover most of it. And most people end up paying for their care themselves out of their pockets.
Okay. So it's self-funded.
It's self-funded. Mm-hmm. The biggest payer of Medicare in the country is Medicaid.
Biggest payer of what? Of
long-term care in the country is Medicaid. Medicaid will pay for long-term care once somebody depletes all of their assets up to $2,000.
Did you get that, everybody? What was that mean? You have to deplete what?
You have to deplete all your assets up to $2,000, and then the Medicaid will come in and pay for your long-term care.
Right. And however, and this is a lot of topics on that. However, who accepts Medicaid? What are the kind of places that accept Medicaid?
Because Medicaid pays less than a private pay, most places that are nursing homes or assisted living facilities will only accept a certain percentage of their patients as Medicaid patients.
Okay.
Because they cannot, in fact, in Illinois, just this last month, 20 nursing homes closed their doors.
Really? Oh my gosh.
Because they were being funded mostly by Medicaid patients, and they couldn't afford to stay open based on
they're reimbursed
based on what Medicaid is paying.
Oh my gosh.
So, so it's most people don't realize it, but long-term care is very expensive.
Yes.
And then once you deplete your money down to $2,000, Medicaid will come in at that time, and you won't be able to pass on anything to your family members.
And you had said it at the continuing education course that I took at your place, that if you own your own long-term care, you're generally guaranteed, or you have like a private room, it's all good. But when you're on Medicaid, there's like 4 to a room. It's like dormitory style, where you have 4 people in the confines of this room, and you don't get to choose your location. It's whatever bed opens up. It could be anywhere, right here.
They assign it? Do I actually assign that? Wow. Or
That's-
is it an assignment, or is it a...
That's the bad news. The bad news is if you are in a place today, if you're in assisted living and you're happy, or if you're in a nursing home and you're happy, and you run out of money because you paid privately, and it's very expensive for long-term care today, but if you run out of money, the facility has an option of either allowing you to stay there and accepting what Medicaid is going to pay, or actually asking you to leave and go to a Medicaid facility, because they can't have more than maybe 10% of their...
So my dad lives in a independent living facility right now, and here in Glenview, a great one, Chestnut Square. And it was really interesting. So he's got a unit that's sort of a corner unit. We'll talk in other episodes, or we have talked. We did a 2-bedroom because we were trying to look forward and say what's going to happen. It wasn't because one of us was going to go live with them. I mean, ideally. But anyways, there was this really nice lady that my dad really enjoyed. One day, she was gone, Ron. I'm being facetious. She was gone. My dad's going, I don't know what happened to her. Of course, because of HIPAA, no one's going to tell you what happened. One day she's there, and one day she's not. And it wasn't they was taken out on an ambulance. I mean, that was clear. And it was like she ran out of money. I mean, I didn't have to. I know she ran out of money and she had to leave, because that's
horrible.
It's terrible, because you get this. Think about that. If my dad had to leave that place right now, I would just feel. I mean, if you don't have the money, you don't have the money. But oh my gosh. Anyways.
So how do people solve that quandary? On one hand, the perception is that long-term care is really expensive, so that you don't want to go out in search of it. On the other hand, I understand that there's a wide spectrum of long-term care that you can get. I mean, if you wanted to buy a policy that would provide some help with the activities of daily living, it was. So I'm going to know it's around $25 an hour to have someone come into your home and take care of you, right? To take care of the toileting, washing, bathing, food, transportation. So if you needed someone that, if all you could afford was $75 a day, and I know that this is a hard question for you to answer because there's so many different carriers, like what is the bare minimum we can help people with just to get their foot in the door, so that you can have at least something in terms of long-term care? Because something's better than nothing.
That's true. That's true. Whatever you can get in a long-term care plan, whatever you can afford, basically is what we go by. And if you can afford to get a plan that gives you $2,000 a month, that could be enough to keep you at home a little bit longer before you might have to go somewhere else. The key, I believe, the key is to think ahead, to not wait until
It's too late.
your health really fails,
Right.
or wait until your assets have been depleted to think about, well, maybe I should get a long-term care policy.
Right.
When I was driving here today, I was on the highway and I went over a number of potholes, and my car just went flying in. And I'm thinking, why couldn't the city take care of that? Why couldn't, why do I have to? And
Why do I have to pay 5 figures a year in property taxes to drive over potholes? Like,
And-
something's wrong with this.
And the analogy came to me is that a long-term care plan is like paving the road for yourself before you get there,
Right.
and making sure that if you do have a health condition and you need long-term care, that you've already planned for
Sure.
that, and that road is paved before you get there. So that was the analogy that
I like it.
had.
That's a good.
And so $2,000 a month is 5 days a week care, maybe $100 a day. So we're talking 4 hours a day, 5 days a week. All right. So I'm going to ask you this question. If you can't answer it, that's fine. But what does a policy like that cost broadly? Is it $75 a month? Is it $400 a month? Like, what does it cost to get started?
That's a great question. The price is going to depend on your age.
Okay.
It's going to depend on your gender.
Right.
Females are being charged more money today, about 40 to 50% more. Because most, if you go to assisted living facility or a nursing home today, you'll find about 70% of it is women.
Exactly right.
And
The ratio. That's exactly.
women take care of the men. Men usually, will go first, and then the woman is left in a situation where she has to take care of herself.
Right.
So we're seeing the insurance companies are charging more for women now.
Right. Just for that. Right.
So the gender is important, the age is important, the health is important. If someone has really bad health right now, they may not be able to get a policy. So you have to go through underwriting, you have to be approved.
Okay.
And so the price is going to depend on all those factors.
Right.
I couldn't give you a set
Okay,
price.
that's fine.
That's a comparison, because most people have touched this issue of health insurance because of the Affordable Care Act, as the ACA as we're going to refer to it. You don't have to worry about health questions anymore, do you?
Right.
And this is people think, so you don't have to. In the old days,
Right.
If you had a health condition, me as an insurance agent advising a client would say, be very careful before you change, don't have a lapse of coverage. Today that doesn't happen in health insurance, and they can't ask the question. Okay, it's and which is a great thing. It's no evidence of insurability and coverage for everybody. When I say that, I mean they just can't underwrite. Okay, can't take the cream of the crop. Long-term care and disability, I know, is the same way. You can, and they will. And that's why it's
So long-term care, they can take the cream of the crop, so they only want the people who are healthy. And not going to use it, right?
They can say no to the policy, right? They can actually turn down if they have a health condition too serious, correct?
About 35% of the people that apply do not get a policy.
Wow, that's a lot. I didn't realize that.
At my desk, because I have all the insurance companies available, I can usually find a home for every
someone.
situation. But if a person's in a situation right now where they have mobility problems,
Right.
or they have something like Parkinson's disease or dementia, they're not going to be able to get a policy.
Right.
So you have to really pave that road while you're healthy.
So you have to be pre-dementia, pre-Parkinson's, pre-diabetes,
Right.
like everything.
Right.
So if you had to say a sweet spot in terms of age, and I know, again, there's so many different varying circumstances, but would you say that if you were 40 and you got a long-term care policy, that it would be much more affordable than if you were 51 or 49? Is this one of these things where like younger is better? I mean,
No, I wouldn't say that. I would say that you would get it whenever you can, as healthy as you can.
That's real important.
Of course, it's better as young as you can because it is based on age.
Mhm.
But you want to look into this when you're as healthy as possible.
Right. Could I get a policy for like my 21-year-old son or my 19-year-old? Is that possible?
They have policies that go all the way down to age 18.
Wow, that's
Right.
cool.
But what's interesting though is, and we'll talk a little bit about where the journey of insurance companies have gone, is guarantees. You get someone who's 18 years old and say, oh, that price is going to be locked in forever, is not really what we're talking about, because it doesn't really exist, because they're trying to predict this. Is that true or is that not true?
We have some plans that are guaranteed
Okay.
to never change in price.
Okay.
We have plans that in the past have gone up substantially, but what the industry found is that they really understood how many people were going to actually hold on to their plans.
Right.
When long-term care insurance companies first started issuing plans, they put into their pricing that a good number of people were going to end up giving up their plan, not paying for it, and just saying, I don't want the policy anymore. That did not come out to be true. What happened is less than 1% of people that have ever bought a long-term care have ever given it up, less than 1%. And that's why insurance companies have had to have price increases for the plans that were priced
way too cheap.
10, 15.
Because on the other side, a term policy, 98% of the policies go, let them go.
Right.
So they know that for the most part, everybody, without exception, is going to let that long term.
Right. When you say term, you're talking about life
regular
insurance.
term life insurance.
Okay.
So the insurance companies came in with a preconceived idea saying there's just no way people are going to pay $500 a month for all these years. At least 80% are going to let their policies lapse, and we're going to just keep the money. When in fact it was 99% of the people kept on paying their. Interesting. All right, so listen, we're at the end of the first 20-minute segment. We're going to take a quick break, and we're going to come back with Ron from Resource Brokerage, and we'll be right back.
How to get a hold of you?
Get a hold of me, Bill Ulivari, 847-686-4800, Senecal Capital Management.
And Matt Barafato, the Elephant Hunter, at matt@elephanthunting.net.